America's unique economic and cultural position in the world will transform its sovereign wealth fund, usually a country's instrument for economic diversification, into one of global dominance, profoundly changing the world economy in the process. Not only is the U.S. the world's largest economy, with a GDP exceeding $30 trillion, but it also boasts the most sophisticated and dominant financial sector. At the time of this video recording, Apple alone has a larger market capitalization than the entire Canadian Stock Exchange, the 9th largest in the world. The U.S. has the most advanced financial institutions, the most highly qualified workforce in the industry, and government-issued bonds that remain the safest investment globally. Crucially, it also prints the world's reserve currency, cementing its financial hegemony. Because of this, much of the world's savings flow into the U.S. economy or its currency. No other destination offers a more secure and lucrative environment for wealth protection and growth. This has left many smaller, more volatile stock markets in the rest of the world. Only the U.S., with its unmatched reputation in finance, can fully capitalize on this. By investing relatively small amounts in these markets, the U.S. could acquire significant stakes in companies with high growth potential. Such investments would trigger waves of additional capital inflows, elevating those companies to international prominence. The power of America's investment brand is unparalleled. Any company that receives American investment would see a surge in both foreign and domestic capital, as well as an enhanced reputation as a stable and promising investment. As long as the U.S. selects investments based on strong fundamentals, favoring well-managed firms, its brand would create self-fulfilling prophecies. This would enrich Americans while allowing the U.S. to shape the winners and losers of global finance. The success of an American sovereign wealth fund would also have far-reaching consequences for global markets. Where investment opportunities were once limited, a wave of new options would emerge. This would likely encourage the creation of new sovereign wealth funds and the expansion of existing ones as nations seek to capitalize on the rising flow of capital. As sovereign wealth funds grow in size, markets would not only expand, but also stabilize, since governments as long-term investors bring predictability and resilience to financial ecosystems. For the U.S., this would yield even greater benefits. Any market it chooses to support would attract huge amounts of both public and private investment, strengthening U.S. allies and giving Washington powerful leverage to align countries with its economic and geopolitical vision. No other country is positioned to rival America's influence. China, for instance, lacks the global investment credibility that the U.S. enjoys. While it has made strides with initiatives like the Belt and Road Initiative, its financial system suffers from a lack of investor confidence. Even within China, domestic investors prefer real estate over stocks, contributing to a fragile housing bubble. While China can mobilize large amounts of capital, it cannot match the scale of private and public investment that a U.S. sovereign wealth fund would unleash. An American sovereign wealth fund would be a game changer, consolidating U.S. financial dominance while expanding and stabilizing global markets. By leveraging its unparalleled financial reputation, the U.S. could direct massive capital flows to select companies and countries, reinforcing its global influence. No competitor, not even China, could effectively challenge this dominance. If structured correctly, such a fund would not only make Americans wealthier, but also give the U.S. government unprecedented leverage in shaping the global financial and political landscape for decades to come.